Hi, everyone. Welcome to another Maine SBDC webinar. My name is Kelsey, and I'm with the Maine Small Business Development Centers. And today we are very lucky to have Maine SBDC at NMDC Business Advisor and Center Director Brandon McDonald here to go over preparing for the big ask. So if you are looking to get some funding for your business and you need to be ready for that financial conversation with a lender or an investor, whoever, I think we're mostly focused on lenders today, but gearing up for that conversation can seem very overwhelming. So he's going to break down kind of the main focuses of what you should be prioritizing and keeping an eye out for. If you have any questions along the way, feel free to plug those into the chat, and we'll have time at the end to go over any of those that are not answered along the way. Also, if you are in the chat, go ahead and introduce yourself. Let us know who you are, where you're calling in from. If you have a business already, if you have a specific industry that you're involved in, let us know. Otherwise, we'll ask you just to stay muted throughout the presentation unless we need you to clarify a question later on, and then we'll ask you to unmute yourself. If you are not familiar with the Maine SBDC, we are here for all things business related. Small business owners can reach out for advising. All of our advising is confidential and free, and we are here to answer any question that you could possibly have. There's no such thing as a too small question or a too stupid question. We are here to help. So after today's event, you'll get an email from me, a follow-up email that will include a link to the recording of today's session, as well as the slides and our contact information. So if you have not already requested advising, or are not set up in our system, you can do so through there. Otherwise, I think we are all set to get started, and I will pass it over to Brandon.
Thank you, Kelsey. So yes, my name is Brandon. I work over at Northern Maine Development Commission. I work alongside both Northern Maine Development Commission as a lender, along with other banks up north in Aroostook County. So today we're going to be talking about how you prepare for the ask. That is how you're going to sit down and figure out how to get financing for your business. So we do have a little bit of an outline for today. So we're going to debunk some of the capital myths that are out there. We're going to talk about some options for poor credit, talk about the C's of credit. Sometimes there's 5, sometimes there's 6. It really depends on who you're talking with. We're going to talk about 5 C's of credit today. We're going to talk about preparing for a lender meeting, what you're going to need once you're kind of sitting in the hot seat. 5 is going to be why it's harder to get a loan. So some businesses have noticed that's a little bit more difficult to get a loan in this climate. We're going to try to figure out what's going on and how you can be better prepared for that. And then we're going to have a little bit of a Q&A session at the end. So feel free to get those questions ready. We'll be answering as many of those as time allows today. So beginning, we're going to talk about the capital myths. So one of the myths, there's just a ton of business grants out there to start a business. They're just everywhere. It's just waiting, so much free money. Unfortunately, when it comes to non-innovative businesses, that is, if I'm looking to open a pizza restaurant, a hairdressing salon, something like that, a startup business is very difficult to find grant funding for. And there's a caveat to that, and I'll talk about that in a minute. But really, that funding is about as common as finding a unicorn. Which is ironic because actually the Maine SBDC may be looking at a program soon for startup funding. So feel free to reach out to a business advisor or reach out to the Maine SBDC, whatever your local chapter is, because there will be some funding coming out in the near future for startups specifically, but they do have to meet income restrictions. So a lot of that information is going to be posted. Once we get news about it, it goes on our website. So keep an eye out on the mainesbdc.org website. But otherwise, outside of that, there's grant options through MTI, which is Maine Technical Institute. It's very hard to get a grant through them without being innovative. And most other organizations also require some kind of innovation or job creation associated with grants. Another myth is I can't start a business. My credit's not too good. credit is a concern to a lender, but there are lenders out there, especially economic development lenders, alternative lenders, we'll talk about them. Even conventional banks can look past some credit issues. A lot of the time, a credit issue that stems from a medical bill, sometimes maybe student loan delinquency, but not default. Default is a little bit more tricky of a situation to overcome. But if you've got some kind of medical loan default or student loan delinquency, there are lenders out there that can look past something like that. Even old credit card bills, it really what a lender likes to focus on is that secured loans, making sure that you pay your secured loans, a car, a home, a mortgage, something like that, ensuring that those get paid. And so another myth is I need 20% down to start a business. I mean, sometimes some banks are saying 25 to 30, and that's not always the case. There are funding sources available that will allow you to start a business as long as it's a smaller business, something maybe out of your home or maybe out of a leased a small space. As long as the loan amount stays under $50,000, there is an opportunity to finance through the Small Business Administration program. It's called a micro loan, and we'll probably talk about that a little bit more towards the end. So moving on are options for poor credit. So the more obvious one is going to be credit repair. That's going to be something like maybe paying off a line of credit, saving up a lump sum. If your credit is poor because it's relatively new, sometimes it's a better idea to open up a diversified line of credit. So maybe you have a credit card, maybe it's time to take out a personal loan, a home loan, a car loan, something that diversifies and shows a lender that you can pay more than a monthly, credit card payment. You're responsible, that your student loans count as a different line of credit. They want to see that there's something beyond that kind of installment debt, that credit card debt. And if things are really, really bad, it's time to look at restructuring. And there's several ways to restructure. There's consolidation, which is when you're still okay credit, enough to get a restructuring loan where maybe you go from a 15% interest rate to a 4% interest rate by lumping all your debts together into one loan to one lender. Another option might be going through the debt settlement process where you'd settle individually with a lender. And then for the most extreme cases, then we start talking about things like bankruptcy. But again, those are things that you want to really speak to a lawyer to ensure that it's right for you. Then we talk about loan guarantees. So there's two major types of loan guarantees in the state right now. One is the Small Business Administration loan, so it's an SBA guarantee, and the other is a FAME loan, a Finance Authority of Maine loan. Both of them, when someone says loan guarantee, it almost always means a lot of paperwork and a little bit more kind of upfront costs on you, the borrower. You're going to be sitting on some waiting times to get a loan guarantee process, and usually this is saved for the last resort. So this is you've got a denial. It's time to bring it up to your lender and say, what about an SBA guarantee or a FAME guarantee? And sometimes lenders are a little bit more, if you bring it up, it means you're ready for the amount of paperwork that's going to come with that. You're very invested into this business and you're ready to do whatever it takes to make it work. So don't be afraid to bring up a third-party guarantee like FAME or SBA if you start encountering issues with conventional financing. And then, of course, when it comes to guarantees, you can use a cosigner, which is, same as, going to get a car and having a family member help sign for it. So a personal family cosigner sometimes can help. Usually the cosigner will put up an asset, or they'll put up some kind of personal guarantee that, maybe they have a very safe, stable job. Then they would be willing to personally guarantee the loan. Maybe they don't have to put an asset up. Maybe they just have to sign for the loan along with you. So don't be afraid to bring that up as an opportunity too, if you believe it would be available. Then there's alternative lenders. So there's economic development lenders. These are going to be the more regional, for some of you down south, maybe KV COG, AvCog. Portland, Maine has their own economic development team with a economic development fund. Up north in Aroostook County, we have a few organizations that have their own economic development funds, some cities, some municipalities. And sometimes if you go directly through a township or a municipality or even an economic development organization, you can get better rates. You can have a little bit more flexibility because most of the time the individuals that sit on that board, while some of them are from banks, others are mostly in the economic development world where they're willing to do what it takes to help someone get into a building. So there may be an opportunity through the alternative lending economic development world. Then there's CDFIs, that's your Community Development Financial Institutions. So many acronyms in this world. So the CDFI, those are going to be like your CEI, your coastal enterprises. NMDC is a CDFI. There's a couple others out of the Portland area, I think Genesis, there's a couple other finance agencies. Essentially, these organizations work with individuals who are primarily marginalized people, low credit, individuals who kind of have been left behind by the traditional banking system. And so they're a great opportunity to get into a organization that usually looks at funding, rural, sometimes outside of the traditional banking demographics. And then, of course, there's your equity investors. So I'm sure some of us have watched Shark Tank. Shark Tank, it's a fun show, but really it's not as real life as it seems. When it comes to equity investors, they're a little bit rare to find, especially going back to that term non-innovative business. So if you're just looking to get up a pizza restaurant or a hairdressing salon, it's a little bit difficult to find a equity investor. But if you have something cool that you're working on, maybe some kind of aquaculture technology, there's equity investors for that. If you're working on something in the IT world for cybersecurity, there's equity investors for that. So there are a couple opportunities. There's the Maine Venture Fund, and then there are the Maine Angels. Those are two different types of equity investors, and they invest in companies at different life stages. And I strongly encourage you to get in touch with an SBDC advisor or even those organizations directly to find out if that kind of equity investing would apply to your company. And then really kind of the end of the line is bootstrapping. I really don't suggest going down this road unless you strongly believe that the pros are going to outweigh the cons. There's retirement borrowing. We'll see people borrow from a 401k. Sometimes we see it happen for a franchise purchase. You'll open up a Little Caesars Pizza and you'll borrow from the 401k, and it's safe income for the most part. Sometimes that works, but if you're going into a world that's hyper competitive and you're concerned that you could lose your investment, I'd be very cautious about retirement borrowing. And credit cards is another one. A lot of people, instead of getting a micro loan at 5-6%, they'll borrow at 15% on a credit card just because it's easier. It's a simpler process, but that doesn't necessarily mean that it's going to cost you less in the long run. The only times I've ever suggested to someone to borrow on a credit card is if they get one of those sweet, 18-month, no interest credit card deals, and they guarantee that they're going to pay themselves off in 18 months. That's the only time a credit card is really going to outweigh a traditional micro loan or even a conventional loan. So keep in mind, if you're going to go the bootstrapping route, sometimes, yes, it's easier, but is it saving you money in the long run? And so moving on, so we're going to talk about the 5 C's of credit. Some people talk about 6, 7, 8. There's so many, but we're going to talk about the major 5 today. So collateral is going to be what a lender looks at for a security interest in assets. So they're going to ask you, what kind of collateral can you put up if a loan, let's say you want to buy a business and the business is $300,000, but really all the assets inside come out to $250,000. Well, you have a collateral gap. There's a gap that you need to meet for a lender to feel comfortable with the security interests they have. Because at the end of the day, a lender is really more concerned about protecting their backside as much as they want to ensure that they can make every loan that comes through the door, especially ones that make the best sense. They have to make sure that they're well secured. The issue with collateral is that it's usually valued under the actual value of the product. So I had an interesting situation come up where some individuals wanted to buy graphics cards, a lot of computer parts. And even though graphics cards and these computer parts are, they still retail at the used value just because of the demand on computer chips and everything right now, a lender is still going to value those if they value them at all. Some lenders choose not even to value equipment. But if they did, they value it at about 50% of the actual value paid for. So if you paid $1,000 for those cards, they would collateralize out at $500 a card. So it's important to ask a lender when the collateral question comes up, what is the valuation of the collateral that I'm able to offer? So one of the other C's is capacity. That's going to be your debt to income ratio, which is just the difference between your income and the debts you pay. So maybe your monthly income, your monthly debts, they'll assign a ratio, they'll divide it out, and they'll say 30% of your income goes towards your debt. Usually a hard cap for most lenders is the mid 40s to 50s. And that's when you start scaring away some of the conventional lenders. So keep in mind that a low debt to income ratio is going to make you a favorable risk in the eyes of a lender. And another piece of capacity is the tenure of your employment. So ensuring that if you just recently got a sweet job, making a nice amount of money, a lender wants to know that you've been there for a couple of years to establish some job security, or know that, this is this employment is a good fit for you and you're probably not going anywhere too soon. If you're in a new job, it doesn't necessarily disqualify you as long as you've had a good employment history without significant gaps. And when I say history, I mean, some lenders they become sticklers and they'll want to go 5+ years. Others just want to know that you've kept a job down for 2 or 3 years. So it's always good to communicate with your lender what their expectations are. So another C is capital. So that's going to be your down payment. Some lenders will look at a non-cash investment as match. So really, it's important to communicate with the lender on this one. Again, we talked about how some lenders will ask for 20 to 25% as a capital investment, a down payment. Then we talk about character. Character is not as important as it used to be with all of these, the fine tech, the online banking, online loan application platforms. They'll still look at your credit history, but kind of gone are the days of going into the one bank in town, the only opportunity you have, and maybe something in your past. The guy there is someone you knew in high school, and you've got a history. So kind of gone are those days. They don't look at that personal character as much as credit history, but still it's important to focus on ensuring that your credit report, looks good. Sometimes there are errors in a credit report. It's very simple to fix those errors. There's actually ways to do it online without even sending in a letter. They'll do it on your behalf. And again, an SBDC advisor would be happy to talk to you about something like that. And then there's conditions, which we'll get into a little bit towards the end. So that could be either the loan term. So sometimes an individual will come in and say, I want a 1-year loan that I want to pay off in a couple of months. And the bank says, listen, I'm not interested in doing the paperwork for a 1-year term loan. Sometimes someone wants a 40-year term, and really you want to stick around the 20 to 30 years tops. So sometimes a lender's not interested in those terms as well. And then other conditions could be the state of the economy, which we'll talk about a little bit afterwards. So here's what you should be preparing to bring to that lender meeting. So you're going to want a complete business plan. So you should be focusing on your short and long-term goals. You want to ensure that a lender can look at this plan and say, okay, I understand exactly where you're going, where you are now. It's good in that business plan to outline exactly what you need for capital. So you want to say, I need $50,000. Here's how I've outlined how I'm going to use that $50,000. It just makes a lender sit down and say, okay, I understand where you're getting this number from. Sometimes you'll put in a marketing analysis or figuring out what the economic forecast looks like for that field. And for that, you're going to want to use some subjective data. So there are organizations that can help you with this. SBDC also has an info service that we utilize that can help you with this to get that marketing analysis done. You want to use as much subjective data as possible. My Uncle Billy told me that I could make a killing up here selling Bitcoin to local guys. That's totally objective. Just because someone tells me that I can do it doesn't necessarily mean that it is going to happen. So I want to make sure that any data that you're using is factual and it can be cited in some way. So that's why marketing data and economic forecasts are great. Sometimes they're going to want some tax returns. Depending on what bank they are, they're probably going to want anywhere from 3 to 5 years. Sometimes they go even more if it's a very, very large loan. Be prepared to explain a significant income shift, especially if it's downward. A lender is going to be happy if it's going up, but if it goes down, be prepared to say, oh, well, COVID hit, we had some issues with childcare and a spouse quit their job and they're now staying at home. So that's fine. Just be prepared to explain that discrepancy to a loan officer. And then will a household member keep their job when this loan goes through? So banks, again, they want to know that if the business, if I'm going back to the Little Caesars Pizza, if I want to make a pizza joint and for all intents and purposes, people get sick of pizza and my franchise doesn't do too well. Well, does my spouse have a job that's going to be able to both make my household payments and the bank's payment? And if the bank feels comfortable understanding that, yep, there's significant income there that will not be going anywhere, sometimes that might be what pushes them right over the edge to get that approval, even though there could be maybe an issue in the near future. Although, again, nobody wants to make a loan based on, the worst case scenario. And then expertise. So I don't normally say go into a room acting like the smartest person in the room, but when it comes to your business, you really should be. You are the expert of your business, your subject. There's been individuals who will come into us at NMDC and they'll ask us for advice on how to do logging, what equipment to do, what do I do to do this? Don't ask your loan officer that. You can ask an SBDC advisor, ask a mentor, ask anyone but the loan officer. When you ask a loan officer how to do your job, it gets a little bit rough for them to sit down and say, I'm comfortable with this individual being able to operate this business without ample assistance. So, other than maybe some questions on accounting, I'd be very careful about asking a loan officer for advice on how you do what you do best. So one of the questions that comes up is, why is a bank reluctant to fund me? So going back to the 5 C's, how well do you fit into the 5 C's? I mean, no one coming through a bank store, it's very rare for them to fit every single one perfectly. But if something's a major issue, how can you fix that issue going forward? Analyze, what's going wrong with the 5 C's, and then figure out how you can remedy that issue, because almost everything with the 5 C's is able to be fixed. It's just determining how you're going to get to that point. Then there's your economic conditions. So again, during COVID, most banks stopped lending altogether to restaurants. This was because of a shortage, both in the workers and a little bit of a concern on how soon in-person dining would resume. So even with a takeout restaurant, unless there was a plan in place that, I'd partner with Grubhub and I have delivery drivers in mind, and I know that there's a demand for this food because of the pandemic, banks were very reluctant to lend to restaurants. And even now, if you're a business that requires a lot of employees, we're still seeing employee shortages. And because of that, a bank is cognizant of, okay, this is a retail establishment that needs a lot of employees. I just think that's a heavy risk for us to take on right now. There were a couple of banks, large chain banks, were actually getting out of the hospitality industry altogether. It wasn't uncommon to be a hotel and pay off a loan for less than the face value of the loan, and it wasn't even treated as a settlement. The bank just wanted to get out of the loan. Just imagine your bank calls you one day and says, hey, please pay this off. We'll take 80%. We just don't want it anymore. That's where banks were getting with their risk, because they were so concerned about these industries. So just understand that although COVID is getting a little bit easier, it hasn't ended, and the finance world is still concerned about what the shakeup's going to be in the next couple of months, and we're still concerned about the economic downturn with lack of employees. So it's definitely something we have to look at going forward, and a lot of financing institutions are concerned. So when it comes to a loan amount, maybe your loan amount's too high. Maybe you're going to a very small credit union asking them to do $500,000. Or maybe it's too low. You're going into a very large bank and asking them to write up all the paperwork to do a $5,000 loan. Keep in mind, base your expectations depending on where you're going. I'm not trying to say a small town bank is better than a large bank. It's just understanding, what sometimes a small bank has less red tape. Sometimes a large bank has more red tape. So it's important to understand how many hoops you're going to be going through for a small loan or a big loan. And then other issues. So sometimes a bank, they can reserve the right to deny someone for any reason, even if it's a solid business plan with ample collateral, all the 5 C's are there. Sometimes you'll see it denied for any reason. Don't be afraid to ask for a denial letter. And again, ask your loan officer that you worked with for some feedback. Maybe there was something that they were afraid of that you can fix for a meeting with another loan officer, or maybe you can answer that loan officer's question and get back in for another meeting at that same bank. So don't be afraid to communicate and work with a lender to ensure that, both of you are on the same page and you're communicating well. So this is where I kind of offer to feel free to contact a Maine SBDC advisor. You can practice your pitch. You can get guidance with us. you'll go to mainesbdc.org and you'll press the request advising button. That's the kind of yellowish orange button in the top right corner. You'll be linked up with a local advisor who's knowledgeable on this. They've worked with financing institutions. They've helped other business owners hit it out of the park and figure out how to get their presentation ready for prime time. And all the assistance that we give, it's free, confidential, one-on-one, unless you want to bring a business partner or whoever in. We can work with as many of you as you have in your group. We'd be happy to help in any way, shape, or form. So feel free, if you want to get your pitch presentation ready, contact us. And at this point, I would be happy to take some questions and see how we can help you reach your goal at this point in time. And I will stop sharing.
Well done, Brandon. I guess I couldn't answer this question on your behalf, but how did you get into this role and why do you enjoy helping small businesses, as a starter question?
So I was in the tech world back in the early 2010s. I did a lot of software development and eventually moved into video game programming. And I was tired of bringing my work home all the time. When I would make my video games and I come home and I play them. I didn't have a large family like I have now, so it was an easier time. And I just wanted to move on to a different role, from owning a business to assisting people with starting it. Plus, I like Aroostook County, so. There
you go. Yeah, and I started a nonprofit with my husband that's based on like virtual field trips. So we unfortunately have all gone through the struggles of owning a business, and so we more readily seem to enjoy supporting small businesses. So that's how we got into this. So I guess there weren't that many questions that came in. If anybody wants to go ahead and submit anything they have.
Mary, I'll try and give a little bit of an update on that one. So there's the Community Development Block Grant. It's a micro enterprise grant. It's a small $10,000 grant that can be utilized for businesses, but it prioritizes a business that creates a job. So that's either going to be a business expansion or a business startup. And what I can say is we don't have a whole lot of news beyond just keep an eye out on the SBDC website over the next couple of weeks. We hopefully will have some updates, and then advisors should be able. Honestly, I see Jennifer putting it out in our newsletter probably soon after we get the go-ahead to start talking about that. So keep an eye out on the newsletter that SBDC puts out, and you'll be one of the first to know. And Alvin, that probably goes the same for your question as well. So if you haven't already subscribed to the Maine SBDC newsletter on the mainesbdc.org website, whenever grants were coming out, whether that was the Maine Economic Recovery Grant, any of the other grants that came out, PPP, the EIDL, the Emergency Injury Disaster Loan, those were all coming out through a newsletter that we put out. And sometimes we put out an emergency newsletter that day if it was a massive program to let individuals know. I mean, very timely.
I'm muted. Classic Zoom. Even I couldn't unmute myself before I started talking. Our funding page is updated as often as possible on the sbdc.org, mainesbdc.org. And so we try and make sure that information is always as up to date as possible. Any information we have will be on that site. And so we do keep some kind of like sort of archival information on there so that you can see what applications are possibly now closed in case you're checking backwards. But any upcoming information will be published on there as soon as we have it as well.
I did see the paid services for business setup. So I echo Kelsey on this one. So when it comes to paying for business setup services, sometimes the formation of an LLC, it can be done through us sending you a PDF of here's the steps you got to go through for a single member LLC. Here's how you get your EIN, which is just going to the IRS website and filling out a form online. I don't want to see you having to pay for a service that is relatively easy to do online. Unless maybe there's a time sensitivity, maybe you don't have enough time to work on those, and that's fine, that's okay. But if you have the time to put in, maybe an hour sometimes, just get these forms in, get your registrations in, it's sometimes easier just to do it yourself, and you're going to save yourself quite a bit of money as well, because you're going to be paying not only the LLC filing to one of these third parties, but you're also going to pay for their time, and that can be significant early on. So.
Yeah, and all of our assistance is free at no cost to you. We're tax funded. So definitely, before you set up any sort of paid programming or services, set up an advising session with a business advisor and ask some of those questions, because they may be able to point you in the right direction for what to prioritize to pay for and what they think you could do yourself. So we are happy to help. I feel like sometimes those questions, I mostly help with marketing, and because I have some experience with a business, I can answer a lot of these questions, but those were a little outside my wheelhouse. So I hope that was helpful. We do not give legal advice. Very adamant, we don't give any legal advice, and please don't use any of our advice in legal capacities. So we will recommend any final reviews go to a lawyer, if possible. Any accounting information like that, we recommend you talk to an accountant. We can help up to a certain point, and then you're going to probably want a professional at that point. Mike just submitted a question. Within a business loan, how does a person include info on potential leases? Hard to commit to a lease unless the loan availability is known. So are estimates okay?
Yeah, so we're going through this with a couple of clients right now, and yes, estimates are okay, and I would strongly suggest to use a high estimate, and that way both the loan officer and you are going to be in for a nice surprise when hopefully that lease comes out to a lower amount. And another way you can do it, if you can get sometimes maybe the place that you're looking at leasing won't give you a price, but if you are able to find something comparable nearby, even if it's not the same building, you could probably use that as an estimate too. But I err on the side of caution with that. If you're gonna, try and estimate the cost of doing business in downtown South Portland using the lease of, in town Westbrook, you're probably going to be in for a rude awakening when that amount changes. So try and make sure it's a comparable amount. But yeah, either way, you can estimate pretty fairly.
And then Alvin, I realized I missed the end of your question. We can definitely give references. We will give you like a few names for any specific type of reference that you're looking for. We can't say like, hey, this guy's the best, but we can give you a couple of names to look into and contact. But we have talked about trying to get, we are hosted by USM, and so we always love crossover programming with USM, and so we're trying to get those law students to help us out with some of this, but so far we're still just talking about it. Awesome. I don't see any other questions right now. Feel free to plug those in. Again, this is a big topic, so if you have any follow-up questions, Brandon's contact information will be in my follow-up email. Also, you can always respond to any email you have ever gotten from me, and it will end up in the right place. And so we got lots of thank yous coming in, so we'll take that as a win. If there are not any other questions, we can give you back some of your afternoon to hopefully stay cool in. Yeah, so just a reminder, I will send out a follow-up email later today that will include a link to the recording and the slides and all of our contact information. So if you are not already set up with an account or with an advisor, you can just click through some of those links and get yourself set up. Lots of thank yous coming in. Thank
you all. We appreciate you being here today, and we're glad we can give you back a couple minutes of time. Hopefully you enjoy the day. Stay cool.
There you go. Thanks, everybody.